All right, Bulls and Bears, I hope everyone is doing wonderfully today. Let's go ahead and get right into it. We've got some big, huge, what I think is huge news to get into today. Of course, we all know what happened with the inflation number. Highly expected. You and I knew exactly what was going on. It's just going to continue to get worse. But we've got something possibly that's going to be uh, the big excuse for an economic downturn, a big excuse for the top 10%, which we know that they own about 90% of all stocks. This could be an excuse for all these big people at the top 10%, to sell off their stocks and initiate rather a market crash. I'm not saying it's going to happen, but if what the information that I'm about to give you here in a few minutes comes true, it will happen. It will definitely happen, right? We're going to talk about that. But first, let's get into some other information here. Drudge put this out here. OJ, he is gone. He's no longer with us. Rest in peace. The juice. And if you guys might, if you're old enough to remember, the defense, if the glove don't fit, you must acquit, right? So if you can come up with a rhyme as a defense in court, if the glove don't fit, you must acquit, then you're a pretty good attorney. You might get away with some stuff, if you know what I mean. Anyways, not to talk too much about that. That's non-financial related. Well, it kind of is, because the court system that went through for a very long time, that cost a lot of money, and some attorneys made a lot of money on that as well. But what I wanted to get into before the big news that I mentioned at the beginning was this. We've got people in California, again, big money coming up with cash to buy homes in California. And depending on the city, your median home price here in California is anywhere from 650,000 up to $1 million plus. And so, who's paying cash for these homes, folks? What did I tell you about? I said that's one of the things that's going to be inflationary in the housing market. I think I was one of the only channels, probably the only channel, to actually tell you that this was going to prevent the housing bubble from going bust. On top of all the other things we talk about, the money printing, etc. All cash offers, wealthy buyers push Southern California home prices to new record. Home prices going up again. And why is it we're the only channel here that warned you about this, right? We're the only channel telling you this. Meantime, we've got lots of other channels out there saying there's going to be a crash. There's going to be a crash. There's going to be a crash. And of course, they get tons of views because desperate buyers are waiting for a crash. People want to think that prices are going to crash, right? But people that are telling you that prices are going to crash, they don't understand how the system of money works. That's what I think. And I think that, we talk about that here on this channel. We know the reasons behind it. Of course, talking about the news and reading in the headlines, right? We do that sometimes, and anybody can do that. But do you understand the system and the mechanism behind this? Why everything that's happening is happening? Do you understand why, right? That's the purpose. One of the purposes of this channel. Of course, we'll give you the news as well, give you my opinion. We'll tell you how to prepare for it. We'll talk about investments, all that good stuff. But folks, let me know what you think about this. Home prices going up again here in California, even with higher mortgage rates. I wish just more people would actually discuss, the real reasons behind this. Let's talk about this. This is absolutely absurd. FDIC chief says the U.S. is ready if big Wall Street bank ever failed. Here's the thing. FDIC has less than 1% compared to the amount of deposits that they need to cover. They have less than 1%, folks. That's a fact. So the FDIC, yeah, they're ready, all right. They're ready to go to the Fed or the Treasury to get the money that they don't actually have. So that when they say they're ready, that's what they're ready to do. They actually don't have the money readily available. They'll have to go get it printed up over here. Hey, turn on the printing press, J. Powell. That's kind of like what's happening actually with the FDIC. Regulators haven't yet used powers it got after the financial crisis. What they're saying, all right? So if everything was fine, there's no problems, no cracks on the banks. Everything is nothing to worry about here, nothing to see here. Move along, move along. If that was the case, then why do we have the FDIC even coming out and saying this, right? If it's not an issue, why talk about it, right? So we know that the banks are insolvent. There's going to be a lot more bank failures. What I think is going to happen is just not my opinion. Actually, they came out and said this. They said smaller regional banks are going to be allowed to fail because they're not systemically important, right? We heard that out of the Fed. We heard that out of Janet Yellen, the Treasury Secretary. So we know these things are in place. The question is when, right? A lot of people say it's going to be before the end of the year. I lean in that direction. I think it's going to happen before the end of the year. Some big, massive bank failures. Maybe not the big ones because they're going to be propped up no matter what, but big regional banks, even some smaller, additional smaller local banks are going to go out, go under, and get bought up, right? So it's not like the depositors are going to lose their money because they'll just get taken over by a bigger bank, right? So that's what I think is going to happen. But very interesting. But let's go ahead and get into the main topic today. What I think is pretty big news here. He warns about possible coordinated attack after what happened over in Europe. So could this be the scapegoat for the economic downturn? So if something like this does happen, never let a good crisis go to waste, as they say. Will all the big money at the top hit the sell button at once and trigger a downturn? Well, so you've got these warnings out there, which are pretty concerning. And to me, it opens up the possibility of something huge happening. But in a year where we have a selection coming up in November, will they let this happen? I'm actually leaning towards no, they won't let this happen because they want to keep the economy going or looking as good as possible. They want to keep it going and looking strong, even with an excuse like some external attack, bringing down the markets or bringing down the economy. I still don't think they want that to happen this year. It's a very important year, if you know what I mean. So keep an eye out and be ready for it. But I'm leaning more towards they're going to keep this thing propped up. I mean, please let me know what you think about this down in comments. And folks, this is sad but true. This is what economics has come to here, not just in the United States, but across the world. It's no longer looking at valuations. Of course, we all agree that prices are too high, stock prices are too high, home prices are too high. The debt ratios with the home prices are out of whack, completely worse than the housing bubble. We know that the stock market, when you look at all the fundamentals, the debt to earnings, all these things are way out of whack, but yet the market still keeps moving higher because it is the system of money meant to keep things propped up. And if the manipulators decide they want markets to go higher, if they want stocks to go higher, if they want home prices to go higher, they'll go higher. It's as simple as that, right? This is a completely 100% manipulated economy. It's not based on any sort of fundamentals. And if you still think that, then you must be living back maybe in the Stone Ages because it's been like this for a long time. It's just that they've ramped up their efforts to keep the bubbles inflated, to keep the markets propped up, to keep inflation running hot instead of allowing a market correction, instead of allowing the bubbles to go bust, instead of allowing prices to go down, the cost of living to go down, instead of allowing the correction. This is a completely, again, manipulated inflationary environment. And until somebody pulls the plug on the mechanisms used to keep this thing inflated, which is the system of money, the banks, then you're going to continue to see this thing get worse unless you get a big, again, pulling the plug, right? It'd have to be something massive, something bigger than 2020. But even then, they use that situation, the 2020 situation, the health crisis, they use that as an excuse to pump more money into the economy, to put out more rescue programs, to keep the bubbles inflated, right? So I don't see any easy way out of this, right? That's why I say keep stacking. By the way, keep stacking. Those of you that were on this channel back when I said stack silver between $14, $15, $16, that's when I got most of my silver. You're a very happy camper today. We've got silver just under $29. I think it touched 29, moved back down to 28.58. Either way, you've almost doubled your money in just a few years ago, but it's been kind of a slow creep up, right? It wasn't a surge. So a lot of people don't really see what's going on, but in just the past few years, if you got into silver, you almost doubled your money. That's not bad, right? Of course, there's lots of other things out there that went up even more, like certain digital assets went up, even more than that. But it's not bad considering it's a hard, tangible asset. You're not paying taxes on it, like a home or real estate. Just owning a home, you're just going to be paying taxes. You've got overhead. You've got silver coins just sitting there making money without having to pay taxes, without maintenance, without upkeep. Again, I'm comparing it to real estate. The hidden cost of home ownership skyrocketing, folks. I said this was going to happen. Wall Street Journal is reporting it. Insurance is pricing people out of their homes. You're likely going to see a lot of people put their homes on the market. As I talked about in one of our recent reports, San Diego homeowners are begging for help because of the flood damage. They can't pay for it, and they can't pay their property taxes, right? So they're giving people a program to help them pay back their property taxes over a length of time because homeowners can't afford it. So it's something else put in place to prevent foreclosures happening here in San Diego. Different programs spreading across the nation, folks. It's getting worse. Buckle up, strap in, and keep an eye on this channel for more because we're going to go through this storm together. Talk to everybody very soon. Keep stacking. Bye for now. Peace.